glorious and its higher grade also happens to be the most vicious stock-picking show on TV. I'm Bruce Whitfield and this is Share Shootout. Looking forward later on to having Bronwyn and Paul join us. The hot stocks on the blocks this evening. But first, with 4 appearances, 3 wins and a loss, ROWAN'S proof that Sally's nougat's not fattening, Williams, and our reigning champion with 7 appearances, 5 wins and 2 losses, Viv, the night watchman governor from Vunani Private Clients. House rules, both of our guests have picked 3 shares. Neither knows what the other holds. Each has got to accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they really don't like. Each has got 30 seconds to argue their stock pick. And now you know the house rules. You both played the game before. Have you ever come up against each other before?
No.
Excellent. He's mean. He's really cruel. He comes across as all nice, big teddy bear, but he's not really. And he's just vicious. That's what happens when you have too much sugar. Do you know his mum created Sally Williams nougat?
Is it? Did you bring any?
Hey?
Oh.
No, didn't bring any. Didn't. If you. Oh, okay. Well, that's the end of the show. Thank you so much for joining us. It's going to have nougat. No, right. On to our first pick. You're the reigning champion, Viv, so I think you should go first. In 30 seconds, I'm fascinated by this pick. Do you always choose shares once they've doubled in price? Just before we go into 30 seconds, do you always like to choose shares?
Well, if it's doubled in price, that means there's something good there.
Well, yes. What a pity we didn't pick it at 13 bucks.
Yes.
In 30 seconds, you know which one it is, don't you, Rowan? In 30 seconds, why do you like Telkom?
Well, we have doubled in price, but it's fallen a great deal more than that before. So we have a company that's incredibly valuable, that's had incredibly bad management for quite a long time. We've had quite a mess up at the judicial government level. It's come through a lot of things right now. Firstly, it's gotten out of the competition board fine, so that's in the past. It's looking to the future. Government's now actually in its favor because of the whole asymmetry when it comes to mobile telecoms. It's going to give them about a 10% advantage in terms of the pricing for the cost, which is positive, and it's going to give them an advantage versus the big holders, which are MTN and Vodacom. And just
30 seconds are up. You see, we're being very vicious and brutal on the time here, Rowan. It's doubled in price. Yeah. It's gone from broken to semi-broken, and the valuation feels fairly full. I've been talking to fund managers about this one recently. One fund manager, very ambitious, had a 5-year price target of 27 Rand 50 on it, and just last week it hit, oh yes, 27 Rand 50, as Viv missed this particular horse, which is bolted and then the barn door closed.
Well, I think the share price volatility explains and shows how difficult the market has found to value this stock, because it's really, I guess, its core assets on sunset industry, fixed line telecoms, and that's they've shown a lot of difficulty losing revenue and losing market share, obviously, to the mobile operators, and unfortunately been very slow to take advantage of the data opportunity, where ADSL should have had a massive market share, has been far surpassed by mobile data.
Let me ask Viv this question. Have you ever bought ADSL install at home from Telkom?
I've tried for what, 5 years. I never want to put a light in my house.
Okay, yeah. But I went and bought the whole box, the whole kit, brought it home, and then took out the instructions, which had bits scratched out and bits written in by hand. And then you phoned the call center, and then I put it all back in the box, and I took it back and I said I'd like a refund, and they fought over that. I said, it's a piece of rubbish. Take it away. I don't want it. And that's devastating, because unfortunately, regardless of everything else, the consumer experience of Telkom, go to hellopeter.com, is diabolical. And that's the biggest problem they face.
When it comes to sunset industries, just remember a couple of weeks ago, Vodacom wants to buy Neotel. And why is that? Because there is an advantage to having that infrastructure on the ground, which Telkom does have. Now we have the Telkom mobile operations that they do, and they have that advantage they have over the major operators with the Vodacom and MTN. Both are going to suffer quite a great deal from this asymmetry, where the smaller guys have a great advantage.
It's a 5-year-old story, and they've not capitalized on it. It's fair enough. New management, restructured the balance sheet, have done great things, and there's been this resurgence in confidence. But until customers believe that there's a change, then how can it possibly succeed, right?
Yeah, so as the underlying assets of what have value, that fixed infrastructure, and I think there's been quite a sort of virtuous circle of good positive news flow, which has clearly driven up the price. As you mentioned, the Neotel transaction, so that puts the asset in play. I think a lot of shorts had a cover then. Then you had the announcement on the mobile termination rates, which is obviously very favorable for Telkom Mobile, and some operational improvements, the latest trading updates. So I think the market may have got ahead of itself in terms of just the momentum on the upside now. It may have overdone it on the downside.
For one moment, I was worried that you were about to give this one the thumbs up. You was with me that the share price has probably rallied a little bit too fast for its own good. There's a good story. It's a nice turnaround story. It's all positive. but the positivity is priced in.
I would say yes. You know, they haven't actually, as you say, operationally they're still very poor, and they're not winning that consumer confidence. So until they do that, you know, that will, in terms of value and business underpinning the current valuation, you know, I don't see value at the current price.
There we go. You're shooting it down.
Down.
You're shot down. We've covered on that particular one. Nothing personal, you understand. It's just because you're too tall. Right. Rowan Williams from Nitrogen Fund Managers. Here's another interesting one. This is a sector that feels like it's in terminal decline. It's a sector where there's a flurry of new listing interest, and we know what happens when there's a flurry of new listings. There was a flurry of new listings just before the tech bubble burst. There was a flurry of new listings in the banking sector. Then that bubble burst, and we saw it in the construction shares. Remember the construction shares, 2007. That was a clear warning sign that the end was nigh for the construction shares. So please tell me why you're going into the property sector. Very attractive property asset in Growthpoint, fantastic business, but at this point in the cycle, too much nougat is my guess, in 30 seconds.
So Growthpoint is the largest listed real estate investment trust, market cap of around 48 billion, has an asset base of 60 billion rand with exposure industrial, retail, commercial and a large property portfolio in Australia. The share price is off its all-time high of around 30 Rand 50. It's currently around 25 Rand. It's on a forward yield of about 6.6%, so that's improved. It's done a lot of clever things. It raised money, 2.5 billion Rand.
30 seconds are up. Exactly. Push pause. You can come back with the final arguments there. Growthpoint, property sector, would you go near it, Viv?
Not at this time. And the cycle we talked about is the interest rate cycle. When it comes to property, the interest rates are basically the competitor and plus the costs. Competitor, I mean, because why buy a property stock that gives you a fixed kind of return or semi-fixed return, where you could buy a bond that gives you a guaranteed return, especially if the bond rate is comparable to the property rate. And with the bond, anyone that talk to right now, you would understand that either we are maybe one cut away from the bottom, or we are at the bottom of the interest rate cycle. And as the US starts tapering next year, or at the start of this year, end of this year anyway, we are going to have a situation in which we are going to have interest rates rise globally, and that's going to take away a lot of attraction that we've had in the past with property stocks. Therefore, I wouldn't be near property stocks when we expect interest rates to start rising.
There we go. A comment on that, Rowan?
Okay, so in terms of the interest rate cycle, our view is that the rates are going to stay lower for longer. You've seen Yellen likely to come in as the new Fed governor, and she's very dovish, and I think you're going to see consistency of Fed policy. If you look at big bond players like Bill Gross, they're saying, as a result, we expect rates to stay lower past 2015, in fact, which was the previous sort of expectation.
Those are US rates, okay, but we have got some fundamental disconnects in terms of the South African economy. We've got potentially an inflation problem. We've got a problem where the Reserve Bank is looking at growth and is trying to keep interest rates as low as possible for as long as possible. But if we have a currency mashup and we have inflation rocketing through 6% once again, the Reserve Bank, regardless of whether it likes it or not, is going to be obliged to raise rates. Isn't that the biggest risk when it comes to this property sector on the JSE?
You're probably right, it is. It's very much a sort of bond-driven, yield-valued type stock. What we would do is, if we saw some of that risk, we would be prepared to hedge out some of it with some more expensive property stocks, which we don't think offer the sort of yield growth that we're going to get out of Growthpoint.
The Australia exposure? Australia's slowing down too. Has Growthpoint called that one wrong?
No, I don't think so. I think the economy in the medium term has got great growth prospects. I mean, if you believe in the commodity super cycle, Australia's very well positioned for that. And the property sector will do well there.
Let's give Viv a chance to shoot this down, because you're going to. I know you are. Give me 3 reasons why you're shooting this one down.
Yes, interest rates in the US may be rising maybe in 2015, but tapering is going to start this year or next year. And that's definitely going to have an impact on South Africa. We've already seen the impact on it, on the rand, basically, since it was announced, not even been implemented. And the weaker rand is going to mean inflation is going to come back in. Australia, yes, the super cycle is a thing that we talked about, but the super cycle goes up and it comes down. And right now, the main driver of the super cycle has been China, and China's growth is definitely either firstly slowing down a little bit, and secondly, more importantly, it's changing its structure. The Chinese used to be the main consumer of a lot, or still the major consumer of a lot of commodities, which are disproportionate to the size of their economy. Over time, when they become a more normalized economy, they are going to, even if they grow, say, at twice the current rate, if they become more normalized, they will still consume less commodities. That just shows how unbalanced their commodity consumption has been.
Okay, shooting it down?
Shooting it down.
Growthpoint is shot down. Nice company, great assets, fantastic point, but it's about the point in the cycle. Sure. And that's what VIV's concern is. Okay, let's have a look then, Viv, at your second pick this evening. And I'm fascinated to see that you continue to be very bullish on one of the most expensive companies on the JSE. Tencent has come under pressure in recent times. There's a bit of a sell-off. The share price of Naspers, which at the moment I saw a headline in Business Day, and this is nothing against Business Day, it's just what happens in the world. Naspers eyes 1,000 Rand. You know it's not going to get to 1,000 Rand because that's what everybody is thinking. And it went to about 946, I think. It has pulled back quite sharply to levels around 900 Rand. You still like it. In 30 seconds, why?
Well, Naspers is a great way to get exposure to China, the Chinese consumer, the Chinese growing economy. In South Africa, we have very little ways in which to get access to that. And if you try to invest directly in China, there's just a lot of accounting issues, etc. What we have here is one of the big three internet companies in China, there's Tencent, that actually creates the majority of Naspers valuation. In fact, you can consider all the other options, the DSTV, the stuff in Russia, the press operations, as all being basically icing on the cake being, of course, Tencent. Now, what is Tencent right now? Tencent's an internet company in China. It has huge exposure, and it's
a fantastic business, no question about it. But wasn't he just dissing Chinese growth? Wasn't he just being rude about China? Wasn't he just saying that China's going ex-growth, but it's slowing down, the structure of the economy is changing fundamentally? Didn't I hear him say that in response to your bullish perspective on the Australian property sector?
Yeah, so I guess Naspers is Tencent, I guess, in terms of the valuation at the margin, definitely, and that's what's been driving the price up, but I guess could easily drive the price down as well. And it is very dependent on the Chinese consumer and the continued consumption of the online gaming, the search, and potentially the success of now the WeChat platform that they've introduced. I think the valuation looks very full, sort of around a P of 50.
To be fair, it looked full at 200, at 300, at 500, 600, at 700, at 750 it was overpriced. It went to 950 and it's settling quite comfortably around 900. And that's the point. This isn't a valuation punt on a stock, which makes it so blimmin' impossible.
Yes, and also I mentioned Chinese growth was changing, not so much slowing. It's changing away from manufacturing towards the consumer, and guess what's the consumer using? The internet services provided by Tencent. And therefore this is something that's going to be growing in the future, because the Chinese economy is going to switch away from being a third consumer driven towards hopefully being half consumer driven in the near future, and eventually coming to the 2/3 that we see in most of the developed world. In that case, the entire economy could stay the same, but the amount of market that Tencent has would double.
Okay, so the market could double. Chinese regulation doesn't bother you?
Chinese regulation is a benefit because it keeps up people like Facebook, and it keeps up people like Google that might be competitors.
He's conceding. You're conceding here. Perhaps the story is a goodie.
We've really loved the story at Naspers. I think we spoke about interest rates in the cycle earlier. I think the problem with some of these growth companies and their meteoric rise, part of the underpin of the valuation is the current prevailing interest rate. So depending what your view is there, I think the ones that have risen so fast can fall almost as fast if we see a change in the interest rate cycle. But your assumption is, like everyone else's assumption, that we've got lower global interest rates for longer. Yeah. So under those circumstances, it should provide the support for Naspers. So can you therefore, in any clear conscience, shoot down Naspers, which is not showing any real value from a value investment perspective, but it's cheaper than it was? Look, it is a great asset, and I think as long as we have a conducive investment environment, good assets will get the premium. So, look, I'm happy to accept this one.
Okay, he's been bullied into accepting it. Naspers at 900 bucks, you're comfortable at around the 900 Rand level. If it gets to 950 again, do you get a bit cautious? Because then we're sort of pushing the boundaries again.
Yeah, for new money. I mean, it's full, but as long as the markets are moving up, it's a good asset. As you say.
He's taking a big chance. I think you may regret it, because the final pick of VIV's is a sexy but also expensive pick. Rowan, I'm interested then in so you're accepting it, just for the record, it's important. Your second pick, a final pick of this particular segment, is a holding company. It's an interesting holding company because companies that the company holds tend to rise with markets. Insurance companies are proxies for the market very often. They're very nice, meaty dividend players. The founding fathers of the First Rand Group have an enormous amount of their personal wealth tied up within this insurance business of RMI. I would like to know in 30 seconds why you think that Laurie, Paul and GT are geniuses.
So investment holding company, 3 principal assets, 25% stake in Discovery and MMI, and then in the unlisted Outsurance. So really the opportunity is in Outsurance and really in the Australian operations. They launched something called UE, which is basically a copy of Outsurance in South Africa. That business is gaining massive traction. They had a 67% growth in premium income in the last 12 months. The last 6 months it actually broke even and turned to profitability at 12 million rand, 15 million rand profit. And so if you look at the trajectory, the J-curve of Outsurance.
30 seconds are up. Okay, the Outsurance one's always been interesting because Outsurance goes into this Australian market just as Westbank was pulling out of the Australian market. I remember that. And that was as securitization markets fell apart. Westbank came running home and Outsurance went into a market dominated by 3 big players, I think. 95% of insurance in Australia, direct insurance, is sold online. They went in to bat against these guys. It's nice to hear that they're actually making a go of it. It's taken them 5 years. Yeah. It's been expensive, no doubt, to get in there, but they're in. Is it good enough, Viv, to convince you?
For strategic and for other reasons, I think this might be the one I accept.
Okay, strategic, fine. What are the other reasons?
Okay, look, I do like the financial sector. Now for the financial sector, I think the insurers are probably the best part of it. I do think that resources are still going to be a bit, under pressure for a while. And then especially if you're ending into the end of the super cycle, I don't want to be in there too much. So, and the banks are also going to be under pressure as well. I mean, we're looking at South African banks being better off than some of the other stuff happening internationally, but still regulations are going to affect us as well because of all the Basel stuff, etc.
You look at the EY came out with their banking confidence report in the last week or so, and EY says, look, the chief executives are looking pale, gloomy, and have got big rings under their eyes, particularly when it comes to retail banking. Investment banking from a very low base is recovering quite nicely, but retail banking is sucking the life out of them. So insurance, you look at just in the life sector, for example, it's different to this, but they're getting the recurring premiums, they're getting new premium income. South Africans are willing to save and insure, and in the short-term space, and in the health space with Discovery, and in the short-term space with Outsurance, they've got life through Momentum. They've got a really nice spread of insurance assets. So you really like this business, and you're also backing the insight of the clever guys who started it all. Okay, and you're accepting it?
I am accepting it.
There we go. It's not
great.
It's so easy. It's such an easy sell. But will they be disappointed with the shares that they have chosen? We're going to take a little break, and when I return, I want to make this call as to who will be the winner. Let's just take you through it again. Rowan Williams from Nitrogen Fund Managers. He's taken Growthpoint and RMI, Rand Merchant Insurance. Growthpoint, wrong time in the cycle, says Viv. He's concerned about the cycle, so shooting down Growthpoint, but accepting Rand Merchant Insurance for all of the good credentials that it presents. An interesting pick. Then, Viv Governor from Bunani Private Clients, his Telkom pick. His shares doubled. Let's be honest about it, over the last 6 months. You've made some very good money out of it up until this point, but has it run too hard? Well, Rowan thinks so. He thinks Telkom is got too expensive too quickly, based on the fact that, yes, they've done some fundamental board level changes, but is it coming through from the bottom? Not yet. It certainly doesn't look like it. Naspers, along on Naspers from Viv Governor, and Rowan, concerned about what might be coming next, has decided to accept Naspers, but I want to see him shoot down Viv's number 3, because that's a lot trickier than you might think. More in just a moment. The Hot Stocks team standing by in the shadows. We'll welcome them in just a minute, but welcome back to Share Shootout right here on CNBC Africa, first in business worldwide. Before the break, Rowan and Viv both gave us 2 of their stock picks. We got from Rowan Williams from Nitrogen Fund Managers, Growthpoint and Rand Merchant Insurance. Rand Merchant the thumbs up, Growthpoint the thumbs down. For Viv Governor from Bunani Private Clients, Telkom SA. Very funny, good joke, but we're not buying. Naspers going long. Naspers has pulled back over the last couple of weeks, inspiring Rowan to accept it. In this part of the show, Rowan, you're going to go first. I'm interested because this company has done absolutely nothing for so long. They've consolidated their businesses a little bit, family-run business, listed on the JSE in the electronic space. Its name, Viv, is... You weren't listening, were you? Altec, give me in 30 seconds why you like it.
So Altron has recently bought out the Altec subsidiary, streamlined the business into 2 main divisions, the TMT division and the PowerTech division. We see a lot of potential for earnings recovery, mainly driven from improved margins in the PowerTech business. The business is highly geared from the transaction. Also, the de-gearing will underpin earnings growth, and a great asset in UEC, which is benefiting from multi-choice growth in Africa and manufacture of set-top boxes. So it looks cheap at a forward P of 11.
Okay, there we go. I gave you an extra second because I interrupted. Altron, Altec. It's always blimmin' confusing. I'm delighted they've consolidated, and now it's called Altron. It's the whole old holding company into which all the assets fit. So Bytes Technologies in there, all of those companies, but in fewer structures, just to simplify and amplify.
That's it.
Finally, it's going to make some money, is it?
Yes. No, I think they're focused. They've had a lot of problems in East Africa. They put that to bed. They got out of that. They got an asset in Liquid Africa out of that, which actually looks quite promising. So the business, and with the restructuring, they clearly focused on their underlying businesses. A lot of potential for rationalization. There's going to be some very simple costs that they're already taking out the business, but longer term, some cross-selling opportunities in that TMT sector. There was some asset overlap.
Do you like Altron, Ruth?
Not actually, because there has been restructuring, but the one person that I think led the failure in East Africa is one of the pieces that's actually been promoted within the new structures. So that doesn't actually augur well for the future. You basically maybe learn from his mistakes, but you don't put the guy that failed before in charge of more stuff. That's one of the reasons here, and that's one of the reasons you worry about a family-run company, especially in a sector like this here, where you need to be a bit more flexible, a bit more intelligent about how you structure yourself, because what was good in the past will not be good in the future in the technology sector. So you have to have somebody that's always on top of the ball and has a history of doing well. So that's my kind of issue with the Altron.
He's not buying it, I'm afraid.
Well, I mean, Robbie Fenter really runs the business. I think he's in charge and he's calling the shots, and he's done a reasonable job, and I think they are refocusing. There have been some management reshuffles. I don't think Altec will be clearly managed with clear deliverables, will be with part of the TMT group. The Bytes management are actually very strong, and I think they will have some key roles in that.
Bytes has been a fantastic asset for them. It really has. It's been the performer in an otherwise quite sluggish business.
Yes.
But you're not accepting it, shooting it down mercilessly. You're gone. And perhaps you'll be rich and they won't. But we'll see whether or not you agree with this particular one, because this sits on a price earnings multiple of like 140 times. It is one of the more expensive shares on the JSE. But then people said that about Capitec. When Capitec was sitting at 100 times earnings, they said this thing will never grow into its earnings, and Capitec has. This is going into a sweet spot, especially in the light of the recent Rivonia judgment. Rivonia School are being told the government calls the shots when it comes to who gets included and who gets excluded when it comes to children's numbers. I'm sure Curro's phone has been ringing off the hook over the last while. Tell me in 30 seconds why Curro is your final pick.
Well, you argued for me. The government has changed some of the rules around here that make some of the previous structures that were available in the semi-private, semi-public school sector, the Model C schools effectively, obsolete. What's happening is that government says now it can tell you how many students to let in. That's going to change the structure of these schools. Barbara Creasy comes out and says 40 people per class or 40 students per class is acceptable, which is obviously something that's not acceptable if you want to have a good education for your child. Well, you're forced to go to the private sector. In the private sector, Curro has been very, very expansionist. That's why it has such a high PE, because it's been borrowing money to build more schools, not because of schools that it has are not making money.
Absolutely. Okay, Curro, can you argue against the long term of Curro?
Look, clearly there's an opportunity in the sector, and we actually did some work here. So you've also got Advotech, which has been a long-term operator in that private school space. And if you like the story, you would much rather buy Advotech than Curro. You look at the valuation, it doesn't make sense. It's basically ludicrous. This is a situation where the story has pushed the share price far beyond the fundamentals. We had a look, if it does, I think it said 80 schools by 2020, and the type of EBITDA and EBITDA margins it expects. So even if it meets all its objectives, the share price is very expensive on a 2020 valuation. So, and I agree there's a lot of opportunity in that sector. Advotech has maybe been a little bit slow, and Curro has taken the lead there. Obviously, Advotech have woken up. They've committed to R1 billion of capex.
But so you'd rather have Advotech in the sector than Curro?
Definitely.
There we go. Now, I've got to make the choice, do I not? Because you're shooting it down. I take it. Okay, fine. So, what do we do in this particular scenario? Viv Governor, I think, based on Curro, it is a fantastic business, but we don't have the patience. I think on that basis, and on that basis alone, I'm afraid you have to go. Well done to Rowan Williams. Congratulations. You get to survive, and you outwitted You outwitted Viv Governor. Next time, Rowan Williams will be taking on Chris Gilmore from APSA Investments in a battle of wits right here on CNBC Africa. Sorry to the guys from Hot Stocks. I know we bumped you last week. We're going to have to bump you again. We're out of time. I'm really sorry about that. Perhaps next time we'll have you on the most vicious stock picking show on TV. Good to see you. Thanks very much for watching. Do tweet us at Bruce Business here on Share Shootout. Use the hashtag SSO. Until next time, as we continue to pick out the winner and shoot out. Look, I'm sorry we can't accommodate you. We've run out of time. Till next time, bye-bye.